Ever felt like you're caught in that loop?
No.
As a trader, I mean.
What loop is that?
You nail a few great trades, feel amazing, think, okay, I've got this,
Uh-huh.
and then poof, those gains just vanish.
Mhm.
Well, it's super frustrating.
Yeah, incredibly common and really demotivating too.
Exactly. So today, we're doing a deep dive into some, let's say, practical wisdom,
Hmm.
stuff designed to help break that cycle, get consistent.
Right. And our source material here is really interesting. It comes from Dr. David Paul.
A legend, really. Decades in the game.
Absolutely. And what's key is his insights were actually sought out by a major bank, Investec in South Africa.
Oh, really? Why them specifically?
Because their traders had exactly that problem we just talked about, making a load of money.
And then giving it all back again.
Precisely. So our mission really is to pull out Dr. Paul's core ideas, his own journey, his techniques, but also the psychology.
Mental game. Crucial.
Yeah, the aim is to give you actionable stuff, to move from that inconsistency to something more sustainable.
Okay, so not just what to do, but also understanding why we fall into those traps.
Exactly. And how to build that mental strength, those analytical skills, to actually avoid the common pitfalls.
All right, let's start with his story then. Dr. David Paul establishes his credibility, right? He made his first winning trade way back, October 82, South Africa.
Yeah, a long time ago. But it wasn't just smooth sailing when he went full-time in October 88.
Cutting the corporate umbilical cord, as he put it.
Right. He openly says he underestimated how difficult that move would be. It took him like 3, 4, maybe even 6 or 7 months to really get traction.
Wow. Even for him.
And his background is fascinating too. Engineering, metallurgy.
A PhD in math?
Yeah, and he jokes it's all largely used in taking money out of markets regularly.
Huh. Love that.
But that initial struggle, even with all that brain power, it just shows, doesn't it?
Yeah. What did it show?
That making that switch to consistent full-time trading, it's tough. It takes huge commitment, more patience than you probably expect. It's not just about knowing stuff.
Got it. So this highly qualified guy who struggled himself initially, how did he end up teaching others about consistency?
Well, it was almost an accident, funnily enough.
Oh, yeah.
Yeah, late 80s, he ended up filling in for someone who didn't show up for a seminar at a golf club in Rustenburg.
A golf club? Seriously?
Yep. He just sort of showed them what he did. Simple as that.
Okay, so how does the bank fit in?
Well, this is the kicker for anyone struggling with consistency. In that golf club audience, a desk head from Investec.
Ah, the bank connection.
Exactly. And this guy approached Dr. Paul specifically because his traders were, and I quote, making a heap of money and then giving all back again.
Wow, the exact problem.
The exact problem. They needed to stop that wild ride. And that conversation, it led directly to Dr. Paul's first major technical analysis seminar in 1989.
So it really proves that inconsistency isn't just a retail trader problem. Even pros at banks deal with it.
Absolutely. And Dr. Paul just happened to be the guy with the experience and maybe the perspective to tackle it.
And all these experiences, they kind of shaped his philosophy, right? He has this saying, the tail should never wag the dog.
I like that. What does he mean by it?
He means it's really about lifestyle, not just chasing the big bucks or flashy things.
Okay.
He mentions his passion for horses, for example. Has one on each continent. That's what matters to him. It's a means to an end.
That's such a healthy perspective, isn't it?
Totally. Keeps you grounded. Does that track with what you see, people losing sight?
Oh, absolutely. So easy to get caught up just chasing the P&L, the money itself. You forget why you're doing it. His approach, it encourages something healthier, probably leads to better decisions too, because you're not just driven by raw greed or fear.
Makes sense. Okay, so speaking of decisions,
Yeah.
What about his methods? Decades of experience must lead somewhere specific. He talks about coming back to core principles, right? Something old, like Wyckoff.
Yeah, exactly. He talks about his cut on something, 120 years old, made famous by Richard Wyckoff.
Okay, Wyckoff. What's the core idea there?
For him, a key thing is looking at price and volume together. He says that gives you an edge.
Price and volume. Okay.
Yeah. Price is king, obviously, but volume. Volume relationships can show you if somebody's playing with you.
Interesting. How so?
Because, as he puts it, the big players can easily manipulate price, but they can't manipulate volume that easily.
even with dark pools and all that.
Yeah, I mean, he acknowledges the limitations, calls dark pools private exchanges where big trades happen off the public radar, but he still finds a volume feed very useful, says it's better than nothing.
Okay, so it gives you a window into market participation beyond just the price moves.
Exactly.
A deeper look.
So how does he use this, like practically? Any examples? Yeah, he gave a couple. He mentioned being short gold recently on a 4-hour chart.
Short gold. But isn't he long-term bullish?
He is on GLD, longer term, but short term, he saw the price volumes suggesting it needed to go back a little bit before it goes up.
Ah, okay. Tactical short within a longer bull view based on that volume signal.
Right. And same thing with the S&P 500, the SPY.
Yeah.
He talked about seeing prices rise, but on markedly falling volume.
Okay, so higher prices, less buying power behind it.
Yeah, signals less participation. For him, that's a potential short setup. He calls it a non-validation in Wyckoff terms.
Like a divergence.
Very similar, yeah, like momentum divergences where price does one thing, but the underlying strength may be shown by volume or an indicator does something else. Price going up, strength going down. It's about seeing the real conviction or lack of it behind the move.
Got it. So if price and volume are his go-to, what does he avoid? What common patterns does he think are less useful?
Good question. He's quite critical of some classic textbook patterns, like the head and shoulders reversal. He used crude oil as an example. He avoids it because he says the risk is a mile to make half a mile.
Bad risk reward, basically.
Exactly. He thinks they look good in textbooks, but aren't great for making consistent money in the real world. Too often, the odds aren't in your favor.
Okay, so he's very focused on probability and risk reward, not just pattern recognition.
Ruthlessly focused, I'd say. It has to actually work consistently.
That's a pretty strong warning against just trading patterns out of a book, isn't it? Especially for newer traders.
It is. He's not saying they're totally useless, perhaps, but you can't rely on them blindly. You need that confluence with volume, with the risk profile.
Okay. Does he use anything else, like Elliott wave?
He uses a simplified version. Just basic impulses and corrections, like 3 up and 2 back is good for longs, 3 down and 2 up, that's great for a short.
Simple.
Very. And he warns against getting bogged down in complex labeling. You know, trying to label every tiny wave.
Analysis paralysis.
Exactly. Miss the big picture, price and volume tell the main story.
So, tying this back to improving, Dr. Paul seems to echo Mark Douglas, who he apparently admired. Start mechanical, then maybe get discretionary.
Yeah. Definitely. Start with a defined methodology. And he's got this great story going, he got hoofed out of a bank, as he puts it.
Kicked out. Why?
Because he simplified volume analysis too much for them. Just low, average, and high.
Seriously, that wasn't analytical enough.
Apparently not. So they brought in these curve-fitting physicists to replace him.
Oh boy, how did that work out?
They got fired later because, as Dr. Paul brilliantly points out, the better the fit to the past, it's going to produce a bloody, awful fit to the future.
The classic over-optimization trap.
Precisely. Trying to perfectly model history guarantees failure going forward. It's a huge lesson. Simple rules, often the best, if you can follow them.
And that's the perfect segue, isn't it? Following the rules. Which brings us to psychology.
The biggest piece of the puzzle for most traders.
We've covered methods, but yeah, like you said, the real battle is often internal. Dr. Paul dives deep into this, right? Someone asked him about getting out of trades too soon.
He did, and his insight is, well, profound. He says the best trades occur after the masses have been stopped out.
Okay, why is that?
Because the big players, they need liquidity. They often engineer a sea of liquidity by pushing price to where all the stop losses are, forcing smaller traders out.
Stop hunting.
Basically, yeah. So the implication is the good trade is always the hard trade.
Hard emotionally, not intellectually.
Exactly. It feels wrong. It feels scary. He quotes his first desk head. When it's time to buy, you won't want to.
Oh man, tell me about it. Every trader knows that feeling, selling right at the low because it just feels terrible.
Right. And Dr. Paul lived it. He talked about buying stocks at the absolute bottom in March 2020 during the COVID crash.
Wow, gutsy.
And he was getting emails calling him a complete effing idiot for doing it.
That perfectly illustrates it. Going against the herd, against your own fear. That's where the opportunity often lies. It's so counterintuitive.
Totally counterintuitive. And this is where his core teaching on mindset comes in. The importance of presence.
Presence, like mindfulness.
Essentially, yes. Being fully in this moment to avoid getting hijacked by fear, he suggests practicing it in everyday life first.
How so?
Like when you're eating dinner or just walking, Be present in those moments where your self-esteem is not being threatened.
Okay. Build the muscle in low-stakes situations.
Exactly. Then try to bring that presence to trading, where a flickering price bar can feel like a direct threat to your ego and trigger that fear response.
That connects really well to that idea of the reptile brain, doesn't it?
It really does. He mentions a psychology professor's theory about this ancient part of our brain.
The fight or flight part.
Right. And it reacts incredibly fast, up to half a second faster than your normal brain. Its job is survival, keeping you safe from danger, physical and emotional.
Like the pain of losing money.
Precisely.
And you see it happen, right?
Yeah.
Like ducking a ball thrown fast, even if you told yourself you wouldn't flinch. Or swerving for a dog.
Yeah, even if you swore you wouldn't swerve this time, it's automatic, instinctive, bypasses conscious thought.
So how does that reptile brain mess us up in trading?
Well, if you're not present, if you're caught up in fear or greed, that reptile brain takes over, and it makes you keep doing really, really, really dumb things.
Like hitting sell at the low or chasing a breakout way too late, deviating from your plan impulsively.
Exactly, those kinds of things. So, Dr. Paul strongly recommends Eckhart Tolle's book, Practicing the Power of Now.
As a tool to build that presence.
Yeah, to build the mental muscle needed to actually stick to your simple trading rules, because, as he says, the rules might be simple.
But they're incredibly difficult to follow.
Because of that automatic, fear-driven reptile brain reaction, presence helps you observe the fear, observe the impulse without acting on it. You stay disciplined.
So it's about watching your emotions, not being swept away by them.
That's the goal.
Okay, so managing positions, holding winners, cutting losers according to the plan. That's the most difficult bit. Requires real strength.
A great deal of strength, he says.
Right.
But, and this is the encouraging part, if you practice this presence, if you can master that internal game, he says money will run at you relatively quickly. It sounds almost mystical, but it's about mastering yourself first. The market just reflects that back to you.
Right. So let's try and wrap this up. Key takeaways from this Dr. David Paul deep dive.
Well, we saw his journey, right? Consistency isn't just about charts, it's about mastering yourself. That came through loud and clear.
Yeah, definitely. And the practical stuff, his focus on price and volume, that idea that volume is harder to fake than price. That's a solid edge.
A real edge. Then there's the emotional side. Understanding that the best trades often feel the worst initially.
When it's time to buy, you won't want to.
Exactly. And maybe the biggest takeaway, the power of presence. Cultivating that awareness to fight back against the knee-jerk reactions of the reptile brain, that seems absolutely central to his philosophy for improvement.
Mastering trading psychology, essentially.
Yeah. So maybe a final thought, building on his ideas.
Go for it.
How much of your trading results, your success, or your struggles really comes down to your ability to just be present. To follow your own simple rules, even when every instinct, every bit of fear is screaming at you to do the opposite.
That's a challenging thought.
Mhm.
It puts the responsibility squarely back on us, doesn't it? Not the market, not the indicator, us.
Pretty much.
So maybe the challenge for you listening is this. Think about one simple rule you consistently break, just one,
Yeah.
and then consider, could practicing presence,
Mm-hmm.
just being more aware in your daily life,
Yeah.
off the charts, could that be the unexpected key, the thing that finally helps you stick to that rule and unlock some real improvement in your trading? Something to think about.